Hello, welcome to FINTRAIL's FinCrime Spotlight, a mini digest which covers current and topical issues related to financial crime. I'm Ciara Aitchison and I'm joined today by Eoin Collins and Rob Evans. So last week, the UK Financial Intelligence Unit recently published their 2022 Suspicious Activity Annual Report. It covers statistics over the 2021 and 21-22 reporting period. So through this episode, we'll talk through some of the key findings in the report and cover off some of our observations. So Rob, I'm going to come to you first. The report outlined a 21% increase in SARs over 2021 and 2022. And the large increase in these SARs have come from the building society sector, which had a 91% year-on-year increase, and other FIs, with fintechs and crypto firms specifically being called out as big contributors. I think there's about 38% increase there. Like, what are your thoughts on some of the trends driving the increase? Is it more awareness and reporting, or increases in volumes, thus proportionally increasing SARs? And what are the key trends that stand out for you?
I think there's probably a bit of all of that, but there's a couple of areas maybe that I thought would be worth unpicking a little bit. So the first around crypto in the fintech space. I had a little look earlier because I had a bit of a hunch that one of the main drivers for that is actually the number of the increasing number of reporting entities within that subsector. So I think in the 2020-2021 period within the UK, there was about a 30% increase in the, well, according to Finextra anyway, increase in the number of registered PIs or payment institutions and electronic money institutions, which broadly would cover the fintech sector as well as some of the cryptos. So I think actually you could argue, or there could be some quite clear correlation between the number of reporting entities increasing and therefore the volume increase in SARs. So I think there's probably some there. I think generally an improved awareness through engagement with the industry. So, you know, the NCA has done a lot to engage through things like initiatives such as the FinTech FinCrime Exchange in the UK on SAR awareness, SAR quality, the DAML regime. I thought one of the really interesting stats within there was about improvement in DAMLs and when they're being called for and when not. And I think that's something that's always been lacking. So I think great progress there. I think volumes as well is probably another area. So I think you'll have seen, although I don't think, for example, the fintech industry has necessarily taken whole market share of traditional institutions, there has been an increase in volume, especially driven by COVID and digitization and some of that stuff. So I think volume of transactions is probably also and client base, customer base, that kind of thing, is probably driving some of it. I don't think it's fair to just turn around and say that the industry, i.e. fintech community in its various myriad forms, is higher risk. Yes, there are risks, but the SAR data doesn't necessarily tell me that when you get below the surface of it. I think there are probably other drivers that need to be considered before you could form that view. And I think if you look at building societies, I think that's always been an underreporting area. And actually, I think a lot of the work that's gone on into improving controls within those and driving awareness of where the risks lie in that particular subset is, I think, probably what's created an uplift. So yeah, I think overall good news that we're reporting more intelligence to law enforcement where appropriate and the suspicion, but yeah.
Yeah, no, and I think you've seen in the report there's an increase in non-financial institutions reporting levels as well. So as I think that maturity of those obliged entities, real estate, lawyers, accountancies, etc., all now having to reporting, that maturity over the past couple of years is probably coming into effect as well too. So I think you said that you talked an interesting stuff about, obviously we're seeing the increase go up, we're seeing quality going up, and there's more going into, more intelligence now going into the sector. And the report itself talks about people and partnerships being the cornerstone to success for effective SAR reporting. But I think there's been a lot of transformation as well then since the last annual review, and they've talked about methods of working and new teams. like SAR reform has been a massive topic for a while, and as we've seen this increase in reporting going through, that reform will need to be effective. Eoin, do you want to maybe talk through what are some of the changes in the report, and like, is it enough? Like, what else could be needed in this space?
Sure. Well, I mean, I think first it's great to see that there have been, improvements made in terms of of hiring. Obviously, that there's been a significant increase, and again, they call out that they're looking to have a total team of over 200, I believe, by the end of this year as well. So that's great to see that continued, I suppose, hiring spree they've been going on for the last while. Also, just to see that the NCA are also embracing the kind of new ways of working we're all used to since COVID. So, allowing flexible work arrangements, and also, like Rob mentioned, a lot of those engagements, they're also moving lots of them online. Forums like SAR working groups and stuff like that are fantastic. But in the past, you could only realistically meet a couple of times a year to get everyone in person and stuff like that. So it's great to see them just embracing that more kind of agile way of communicating with its reporters and everyone involved as well. Also seeing that there's dedicated teams for certain topics now as well, like the combating kleptocracy cell for criminal sanctions evasion and high and money laundering as well. So I think that's all great. And I guess as a former SAR reporter myself, I think the thing I'm most excited about is seeing the promise of the new more user-friendly online SAR portal, and I guess the bulk API functionality as well to do bulk reporting. That should be a game changer, really. So I think it's all really good news. Really good news. The only thing that I really hope with the the new portal and the API technology as well is that it's really fit for purpose now, because that process has been going on for a long time, and I really hope that it's something that can be iterated on and improved upon, so that when things happen like we've seen over the last few years where there needs to be a sharp change in the way we do things, that it's able to keep up with that.
Yeah, I think the efficiencies that could bring could actually be make quite a difference for a number of firms, particularly those with the larger scale reporting volumes as well. So Eoin, and Rob touched on DAML SARs earlier when he was talking, and the report highlights a significant increase in the funds denied from DAML SARs, and it called out an important component of that benefit was linked to the moratorium extension, which is increased by the Criminal Finance Act. Can you explain a little bit about what that is, why it's having an impact, and are there any potential downsides for FIs to consider when that is being applied to DAML SARs?
Sure. Well, it was a big change, I guess, because prior to the 2017 Act, they could only they couldn't extend past the 31-day moratorium, and since then that can be increased by application to Crown Court by up to a total of 6 months, but it has to be individual 31-day periods. So there's a little bit of oversight there as well. But I think obviously the main impact here is that these types of investigations often take a long time. It's not something that can be done and rushed through in a month. So I think it's fantastic that it gives gives the NCA that little bit of breathing room and time to gather more intelligence and do full, thorough investigations. I think it's from an FI side of things, kind of downsides, but I guess also just things to really just pay attention to, which is, like, I've had experience with this where you're trying to manage communications, trying to make sure you don't tip off customers. And when you've got a particularly angry customer, again, the suspect here that could be up to no good, and they're really kind of pressuring you to give answers, it can be a lot to handle. I think particularly from less mature firms who are also going to be obviously very, very careful around managing their customers and customer service and that kind of thing. So it's really important to ensure that you've got a really good process in place for these instances, and running by your legal team, stuff like that. So it's just it's a tricky one to balance, and I think that the increase in these extensions kind of adds more to that for institutions. And I think the other thing as well, again, a downside on one hand, but also maybe a call to action to really ensure your controls are solid in terms of holding funds, because I think for less mature firms as well, you might see that bad actors will really try everything they can to try and kind of get some of that money back. So making sure you've got your really tight controls regarding your funds and chargebacks, refunds, that kind of thing as well.
No, I think that's a really good shout actually to be calling out off the back of that, because I think it's probably one of the necessary evils in sort of tackling in these investigations. But looking at the controls around it is certainly something good to call out. So Rob, I'm going to come back to you then. Like you mentioned earlier on around some of the partnerships, the NCAA are what they're doing well. You talked about with the FFE, for example, and the impact that can have. But we often still hear from clients and across the industry the feedback loop isn't where it should be. And we know, like, unlike the US, the UK isn't going to be considering national financial crime priorities. We've got the UK NRA, which has now been pushed back likely to 2024. Like, how can firms understand if they're making a difference, and how do they focus their limited resources in providing the right intelligence to law enforcement who, even though, like as Eoin said, 200 extra staff, they are still also working with limited resources? Like, can we ever truly get to this intelligence-led reporting regime?
Great question. No, in current form, we aren't in the right place.
Yeah.
Can we get there? I think we probably can, but there's a real step change in how we think about, I mean, frankly, we could do a whole podcast on this, a whole series of podcasts on this, because I think there is a fundamental shift in how we need to address financial crime and financial crime intelligence as a whole in prioritization. But to try and keep it succinct, I think that, you know, the NCA has evolved and moved forward. Definitely give them credit. There's been some people gone in there with some fresh ideas. They've really moved things forward. So I think we've seen a marked improvement over the last few years. They've got a very difficult job to do, and I think they're doing as best they possibly can with the capabilities and people that they've got. Is there more that can be done over the years? Definitely there is. I think one of the challenges for reporting in regulated institutions is always going to be identifying where to assign their limited resources. And when I say limited, I mean within the sensible confines of running a business. I think the challenge with that is always going to have to be focused for now on where your key risks are as a business for you, and making sure, I always talk about it, I think on the last time I appeared, I banged on about making sure your risk assessment is relevant to you as a business and how important that is, without any greater direction from at a national level. I think that's something that people still have to keep very much focused on, because that is the bit that will support your discussions with regulators and ensure that you're focusing the right areas. Do I think we need to get to a better position where there is that more national direction in where effort is applied? Absolutely we do, but we're not going to crack that in the next 12 months. So let's keep that debate going. There's lots of initiatives looking at that at the moment. But for people here and now, I think the best thing that they can do is focus on where they see their risk exposure.
Yeah, great. And I think sort of that you mentioned risk assessment, talking about in the last episode, I think we've seen it come up probably in every discussion we've had, and I imagine it continues to sort of be cemented as that cornerstone of sort of that AML framework then, and how it translates into so many different control areas across the organization. Well, that's it for today. Thank you, Eoin and Rob, for your time, and for everyone watching FinTrail FinCrime Spotlight. Goodbye.